Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 19th of May. The greenback rebounded yesterday, helped by a video clip of former FBI Director Comey's testimony on the 3rd of May. Under oath, Comey suggested that there had been no obstructions to FBI investigations. Following recent reports that President Trump asked the former FBI director to drop an investigation regarding ties between Trump's prior security advisor Michael Flynn and Russia, this video was passed around as a proof that Trump didn't pressure him. The result was a rebound in the dollar, a retreat in safe havens, and a recovery in equity markets. However, if someone listens to the clip more carefully, he should notice that Comey was asked specifically if someone at the Department of Justice or the Attorney General had ever asked him to halt an investigation. In our view, this disregards the video as an evidence of Comey not being pressured by the White House, and thus we don't expect any material change in market sentiment in the absence of any stronger evidence. Risk aversion may prevail again, at least for the next few days, supporting safe havens and bringing equity markets under renewed selling interest. The dollar could also resume its latest tumble. Dollar yen edged north after it hit support below the 110.50 level. The pair emerged back above 111.10, but it was stopped slightly below the resistance hurdle of 111.90. Bearing in mind that the pair remains within the channel that has been in place since December, we still see the likelihood for the bears to take the reins again soon and perhaps aim for another test near 110.50. Now, as for today, the main event will probably be the release of Canada's CPI data for April. The forecast is for both the headline and the core CPI rates to have ticked up following notable tumbles in March. The forecast is supported by the nation's market manufacturing PMI for April, which showed another robust increase in factory gate prices. A rebound in these rates would likely be an encouraging development for Bank of Canada officials, as it could confirm that the softness in March was only transitory and may thereby support the Canadian dollar. Nevertheless, we doubt that it will lead to a material change in the bank's dovish bias. The Bank of Canada made it clear that it is going to maintain a cautious stance until uncertainties around trade clear up, something we don't see happening anytime soon, given the recent tariffs from the US government. Dollar CAD has been trading in a consolidative manner in the last couple of days, oscillating around the key support obstacle of 136. We believe that the rate may continue to trade at current levels today, waiting for Canada's CPI data. If indeed we get a rebound in the nation's inflation rates, sellers may take the opportunity and drive the battle below the aforementioned obstacle. Something like that may initially pave the way for our next support of 135.30. Now, as for the rest of today's events, during the European day, the economic calendar is very light. The most noteworthy data we get is Germany's PPI for April and Eurozone's current account balance for March. However, neither of these indicators is usually a major market mover for the euro. From Canada, besides the CPI data, we also get retail sales for March. We also have three speakers on the agenda: ECB Vice President Vitor Constancio, ECB Executive Board Member Peter Praet, and St. Louis Fed President James Bullard. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.